Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Dan Raju, CEO of Tradier, an infrastructure fabric that powers over 250 investing platforms globally and serves some of the most active traders in the market. Dan, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me, Jill. Really excited. How are you doing?
Good. We are doing well. And you say it's only a matter of time before embedded finance solutions become available to retail traders. Explain to us what embedded finance is.
No, actually, embedded finance is already in full play right now, right? Embedded finance is very simple. See, traditionally investing, Jill, was offered through your mom and dad's vertical brokerage firm. So when you wanted to invest, you would go to your traditional brokerage firm and you would do everything you want to do as it pertains to investing. What firms like Tradier do is they take the act of investing and break it open and make it available any place, anywhere, anytime, to any connected device. So the reason why it's been growing so much is now investing can occur through your social platform, mobile, web, international firms, and even sometimes your traditional savings and checking driven banking services can also invest in products. So the idea of embedded finance is non-traditional vertical companies, non-brokerage services being offered by non-vertical offerings, and investing can occur from any place, any time. And APIs are basically the heart of that.
Right. So what is the future of embedded finance as it relates to overall market valuations?
I think there is a reset in the stack. I think fundamentally the way these offerings were being created are just being totally changed from the ground up. So I think what you have is there's a bright future for embedded finance, particularly driven by multiple facts, right? One, basically, Jill, is the fact that a lot of customers are coming in who have come into the market since 2015 and are now basically going ahead and offering and are looking for products. So I think what is happening is you have that driving a need for a tremendous amount of new products coming into the market. Plus, at the same time, a lot of international companies are trying to get into the US market and offer US listed securities. Plus, at the same time, the traditional banks are being unbundled. So I think the combination of all of these is creating a lot of new platforms, a lot of new offering, new price combinations, new what I call is variations that retail investors are demanding. And so embedded finance is making that, is basically being a catalyst. And so you're going to find a tremendous growth in that sector because there is an unbundling effect and the needed infrastructure.
Do you think social media companies will offer investing products through APIs?
And I think it's already occurring if you think about it, right? PayPal recently, announced that it's a peer-to-peer lending platform, right? It's a lending platform, and they're offering now investing, right? And you see all the way, social platforms, a lot of content-driven platforms that used to talk about the capital markets are now offering the capability to trade, right? So you are going to see end customers are looking for one-stop experiences as it pertains to their social presence. And I think so you are going to see an increase in traditional social platforms offering it for a couple of reasons. Number one is they want to keep the customers in the platform, number one. Number two is many of these social platforms are trying to figure out a way how to make money. And I think offering investing products actually is a way for them to monetize their customers, which is a huge challenge for them. And lastly, and most importantly, is it's a part of their overall strategy on how to leverage their existing customer base. Traditional ad-based revenues, traditional what we call as paywall kind of revenues on social platforms are dying out so fast that investing and offering investing products has become a way by which they can monetize their customers.
Right. And we spoke a lot about this in 2020 and 2021 with the explosion of the retail investor. So Dan, where do you draw the line between investor protection, KYC, knowing your customer, and of course, democratizing access? There are two arguments to be made there.
Yeah, I think 2022 is going to be an interesting year. I think you're going to see it's on a couple of fronts. I think on crypto, you're going to see regulation. I don't expect to see hard regulation come in, but I think policy clarity is what I think I'll see in 2022. And on the traditional listed equities and options side, you are going to see a lot of regulation coming in, mostly pertaining to disclosures and transparency, and making sure the end retail customer is basically going to have all the information at fingertips. So I think it's going to be a balancing act. I think 2022 is going to be the year where you're going to see a tremendous boom in a few sectors, options being one among them, what I call as active trading, new products being offered. At the same time, you're going to basically get a lot of new regulation coming into the market. And so you'll see a lot of technology innovation around how do you match the regulatory requirements through the ongoing demand for new products. So I think 2022 is going to be the balancing act between investing innovation and also balancing out regulation, both coming at the same time.
All right, Dan, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Thank you.